Hello, everyone. Welcome to a very special edition of the Bank Tellers, where we dive into the intersection of TradFi and DeFi. This is a major topic we'll be exploring more at Money 2020 USA. And today we are joined by Leif Abraham, co-founder and co-CEO at Public. Hey, Leif, how are you doing?
Hey, Miggy, what's up? Thanks for having me.
Thank you for joining us. Maybe to kick things off, I can ask you to tell us a little bit about what you guys at Public do.
Yeah. So, public investing platform, we're essentially, helping people to build proper portfolios for the long term, and helping that by giving them a vast variety of asset classes, think of it from stocks to crypto to treasuries, corporate bonds, options, and a lot of things around that. And then also just helping them to get a lot of context around the markets, especially now also in the use of AI, and so on.
Awesome. I've been following the public story for a long time, and one thing that's really unique and interesting about what you guys are doing, and just a class of companies in fintech in general, is you've managed to get a lot of users and a lot of folks onto your platform. So I guess one question I would want to kind of start off with is, what's been what's the biggest challenge companies are facing when it comes to acquiring new customers, and how have you guys managed to actually build such a dedicated user base?
I mean, in our case, and I think in any type of like financial services company, for lack of better wording, I would first argue that trust is key, and trust is a little bit like built through everything you do. I always say like your brand is what people think about you, and you're trying to influence that as much as possible. But at the end of the day, it's a little bit like if you're the app that's always down, you're going to be known as the app that's always down. If you're the app with fantastic customer service, you'll be known as the app with fantastic customer service. And so like everything you do kind of feeds into what people think about you, which then turns into your brand. And, and so we pretend like we have a lot of influence over it. But I would argue that, there's also a lot of things in brand building that are kind of going counter that. So very early on, we focused a lot on that brand building. And I think that's a little bit like a bank that you deposit into over the life cycle of your company. And, it's kind of like building your sales, right? So whenever there's wind in your sails from market events or so on, right? In our case, we had the COVID drop in 2020. We had, meme stocks in 2021. We had interest rate changes in 2022 and beyond, and so there's always these like macro events that also drive certain changes in people's, behavior and perception. And those can be great wins in your sales. And I think over the time of your company, you kind of have to focus on like building large sales so you can capture more of that wind. And I think a lot of your brand building is actually, helping you to kind of build these bigger sales. And there's other things, obviously, your footprint online and, partnerships and all the kind of things. But that's why I think very early on we've done a lot of work in kind of brand building and like how we, create something where we can have a lot of trust. I can talk more about this. It's very high level now, but I'm going to pause here for a second.
I love that. You said something there that I thought was just really unique too, right? Like you made this analogy that like you're building trust, like as if you're like the way a bank is being entrusted to kind of hold deposits, especially now with just the way in which the world and technology has developed, right? With AI on the one hand, for instance, in terms of like the growth of other asset classes, I feel like trust has become such an important moat. And I think that was such a great point. In terms of from your customer base, how much are you seeing nowadays the question around trust, platform of choice and the trust around that? Is that something you notice or?
Every single day. Every
Yeah.
single day. And obviously it falls into a lot of different categories, right? First off, it starts out with people asking things like, how are my assets insured? How are you regulated? And so on. And for us, for example, like we're a US-based broker dealer, which means we're regulated in the US. There's insurance there. Our customer service is licensed. They're stateside. They're sitting in the US. And so a lot of things like that. And I think then it falls into things like customer service of like, so if there is an issue, can I actually talk to someone or not? Or do I submit a ticket into the ether? And that is the other side of it, I think. And then I think the last piece is, especially in the kind of newer financial services companies, like call it like that last generation of neo brokers and, crypto providers and so on, there has been a lot of shit in the past, and obviously FTX is the biggest one that always comes up, but there have been more controversies and things like that has happened. And so in our space, if you're not an incumbent, it's not just about the trust that you build yourself, but it's also a little bit the trust in the space. And I think specifically throughout 2021 to 2023 or so, there have been a lot of things that happened in the space, like the FTX of this world, or, staking products that went south and all that kind of stuff that has hurt the entire space, which creates even more pressure for companies like ourselves to make sure and communicate of like how you're different, you're actually regulated, funds are actually hold one-to-one, they're actually insured, et cetera, et cetera. And therefore, there's a lot of work that needs to get done in order to educate customers and potential customers around all these safeguards that you have that a lot of these early players, especially in the crypto world, just did not have.
Yeah, I think such a great transition and segue into talking about crypto. And, we've seen the FTX example, as you said, but there was, that was maybe the biggest one, but there was in the crypto space, there was a litany of issues, right? And it's always interesting to me now how, if you were in crypto 5, 7, 10 years ago, a lot of it was around outside of the institutional and the traditional kind of regulatory space. And it sounds to me like though your customers actually are keen to be able to maybe be involved in the crypto side, but also they want to have some of the safeguards that have developed in the TradFi space. How is that developed, and is that something that's getting stronger, or is there some shifts there?
No, 100%. I think you're describing that exactly the right way. And I think that's why things like the Bitcoin ETFs and so on have been a very positive development in that sense. Because what happened is that for the people that want to have exposure to that asset class, you essentially took that new age asset class of Bitcoin in that moment, for example, and it was wrapped in a regulated security wrapper, so to say. And that suddenly creates all these, like puts it into a place where you have all these, safeguards that are in place of, a brokerage account being insured, the way the assets have to be held, the firms that distribute the stuff and, so to say, sell it to customers, to brokers being regulated a certain way, have to be run a certain way, audited companies, right? Like we get properly audited every year, like a public company would, like at that same level, by the way, right? And so on. And so like there is a lot of these safeguards that just, did not exist in crypto, where now by the wrapper of an ETF are suddenly introduced into that asset class. And I would also argue that there's a lot of people out there who don't really give a damn about, if it's decentralized or not, and, and all these things. They care and believe in the asset class and they want exposure to that, but they're not necessarily like crazy maxis that don't necessarily believe that crypto is going to change the entire financial system tomorrow and everything needs to be decentralized and keep the government away from assets and da 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 da. They might not necessarily go that far, but they still want to have exposure to that asset class, and they actually appreciate the safeguards that the old financial system has developed over the 100 years of existence.
Absolutely. I think that's like you touched on such an interesting point around the DeFi piece, right? It's I always think in general, right? Like I think most customers, for example, they don't necessarily care whether it's this type of bank or that type of bank. They just want to know that their deposits are safe. Or when they're making a payment, they don't necessarily care too much whether it's an open finance payment or there is a plaid layer or there's a P2P payment. They just want to make a payment, right? Like you just want to get it done. And it sounds like, when you touch on that, it just makes me think, I think one of the kind of big misconceptions there is in the traditional financial service world is that how broad the DeFi space is. And within that broadness, there are those maximalists, right, who want, complete autonomy, complete privacy. But many people probably want to have exposure to all of these different types of asset classes. Where maybe people might want to also increasingly have access to gold or other types of commodities as part of their portfolio. You, as you've been building public and as you kind of, continue to engage with your customers and the industry generally, what are the kind of other main misconceptions that you think the traditional financial world has about DeFi? What are like the kinds of, frames of thinking that maybe not so accurate that are still very prevalent today?
I mean, again, if it's truly decentralized stuff, I think you get back to this maxi concept where it's just if you're like a crazy libertarian, then you will care about these things a lot, but more of a principled thing that is in you than necessarily, potentially always complete logical utility and so on. And I think some of those views might also be a little bit rooted in like, I don't know, some sort of like crazy pessimism of like what happens if the government completely turns authoritarian tomorrow and the world collapses, what happens then to your assets? And I don't know, I would argue maybe there's other issues in the moment if that happens anyway. But, and so, there's a little bit like some of these views I consider sometimes a little bit too tight around doomsday scenarios. And I'm maybe too much of an optimist to wrap my head around that perfectly. But, and so I think that's an area. Now, the other side is, I think often right now, the rhetoric of putting everything on chain, tokenizing everything, and so on is also often just used as a way to kind of go around existing regulations somewhere. And that can be a great accelerant for the businesses doing this. But I would argue, I'm yet to see great use cases for the actual end customer there. And the biggest use case that I see is that if you're in a market that is not as developed, if you're in a market that doesn't necessarily have access to these asset classes and so on, then this circumvention of going around those regulatory hurdles that might have been in the way of, citizens of those countries to have access to that kind of stuff, then that is a way for you to get access. And so, yes, then you get some benefit out of it. But in very developed markets like the US or the EU or so on, I'd argue that the end customer benefits are borderline and non-existent right now, And so if you look at things like this big topic of tokenizing stocks, right? Like talking FTX, they were one of the first who did it back in the day, Now other players are going into it. Robinhood just announced it yesterday, right? And so on. And, I can see from a business perspective of why a company like Robinhood would want to go into that, because it's a way for you to launch suddenly stock trading and all these markets that you have access to through through your crypto licensing, and you're kind of going around the traditional brokerage regulation. And it's a little bit of a hack, We'll see how long that sticks around like that, and if the regulators will have issue with that or not in those different countries. But, that's kind of like a way to say, okay, now we can launch all these markets. That's great. We could also kind of reintroduce a commission because in that case, for example, right, they charge 10 bips on all the transactions. And so now you're also like 10x the revenue you could make on these stock trades compared to what they make on the PFOF on those trades and stuff. And now you're in all these markets. And obviously, from a company's perspective, like I can see those benefits, no question. Now, from a user's perspective, it's a little bit like, okay, the token is just the wrapper, right? You're still buying a stock that is a real stock that is custodied and, by that custodian in that moment. In that case, it's Robinhood or whatever, other player you work with there. So that stock still exists in the old financial system. You're just buying this wrapper of the token around it. But to your point, for you as a user, this isn't really, I can tell you more drawbacks than really benefits from that. And it seems cool that it's like now lives on the blockchain in some way. And, maybe one day you can look at it in your wallet, but it's not that you're not truly self-custodying it because the stock is still custodied somewhere else. It's traditional stock still, it's just a wrapper. And so it just feels very much like we're still at the stage of it's a hack to go around regulation in certain markets. The end user benefit seems a little bit non-existent, and potentially it's even worse for the user because there's some regulation that doesn't apply, includes also just safeguards wise and insurance wise and all these things that exist in a traditional financial system that does not exist if you're buying a wrapper in form of a token.
Do you think something like that is unfair for a company like Public, right? Like you guys have taken regulation very seriously and you wanted to kind of, you offer access to traditional stock market products, but you also offer access to digital assets, but you've done it in a way where I'm sure you spent a lot of time building that regulatory infrastructure internally, making sure you're compliant with the best possible laws in the US, right? Do you think it's unfair now that this kind of hack exists for someone and other potential competitors to kind of try to go to market quickly without having done that work? Or is that something that you don't necessarily think about?
Yeah, I mean, like this hack only exists in certain jurisdictions, right? In the US, it still doesn't exist. And so, I don't know. It's like, I think it's just like, it is a different piece of infrastructure. And I kind of feel that most users don't really give a damn. They want to own Apple stock or whatever, and they want to make sure when they own that it's secure, that their money is safe, that there's good customer service, etc. And I think those things will not change. And it doesn't it doesn't really matter much to them what the underlying technical infrastructure is, as long as those check marks are there. How secure is it? How safe is it? What's my customer service look like, etc. And so I don't really think it matters that much in that way. And I think what's more the sense of that, I think it's more important that for the customer, it's clear of what they're interacting with, so because at least for now, in most jurisdictions, it is likely more risky for you to own a token wrapper of a stock than to own the actual stock, just because of the existing regulation and the non-existing regulation around those two different types of assets.
That's fascinating. I think, and I think what you're saying makes a lot of sense. I guess, and we've talked a little bit about this, right? Some of the kind of stuff that's been hyped in the DeFi world, especially with decentralization. Recently, over the last few months, right? For anyone who probably doesn't even care about financial services, stable coins are the it thing, right? I'm trying to make stablecoin summer a term, because it feels like we're in that right now. We're in that phase where no day goes by where a major company hasn't announced a stable coin or some type of stable coin like product. I think JPM are now launching their tokenized deposit like product on Coinbase, Walmart, Amazon, Fiserv, Master. Everyone is getting into that space. How are you guys at Public thinking about something like stable coins, right? I know obviously again you guys are an investment platform, but is this part of this DeFi was the kind of blockchain space that's really starting to find this institutional product market fit, something you guys think about, you look at? Does it affect any of what you do?
Yeah. I mean, there's a few aspects here, right? So I would say there is a market of customers that has a lot of money in crypto. And if it's for personal tax reasons or whatever, they don't necessarily want to convert crypto into fiat. And so stable coins serve them the purpose of not doing that yet, and wherever they're living or whatnot, to potentially circumvent, liquidity moments where they have to pay taxes on and whatnot. Now that means that there's an opportunity, because there's a massive market with billions and billions of dollars there that could be added to portfolios somewhere and whatnot. And so things like funding your account with stablecoin, funding your account with crypto and stuff like that is a way for companies like ourselves to tap into huge amounts of AUM that could be added to a platform and whatnot. That's like a very obvious one, just very straightforward. The second is, again, jurisdictions that are not as developed as the US and EU are and whatnot, and where, if you live in Argentina, crypto and stablecoins and whatnot have a real benefit for you, because it helps you to, get your money out of, a high inflationary environment, for example, and things like that. It can help financial transactions, but especially between countries like that, and so on. Like, there is a real use case there. And then I think the third one kind of falls more into like money settlement internally for companies like ourselves, in terms of, there's banking hours still. There might be a long weekend. You have to settle something in 2 days. There's a long weekend. It takes 3 days. Can you use, at least internally, things like stablecoins to like move money between internal entities quicker and stuff like that? There's a little bit of a use case there. And I think after that, it starts to become a little thin, at least from my perspective. And so I think it makes sense for a lot of companies to tinker with it. Does it feel a little overhyped? Maybe. At least right
Just
now.
a little bit.
Just a little bit. What PE is Circle trading at right now?
Yeah.
But there are some real use cases. But again, I feel like that falls into like hyper international companies. It falls into large companies that have to have a lot of internal different entities with money movements. It falls into jurisdictions that are just environments that are maybe volatile or less developed and so on. And I feel still that those are like the true use cases. And then beyond that, I think you will just get into very detailed Twitter feuds with some people who have strong opinions on Twitter. But other than that, I feel like that even the traditional system has a lot of things existing that potentially even do it better sometimes.
Yeah, I think that piece around um the tax piece in terms of if you want to lock in some of those gains but not be subject to capital gains tax, that's like a really interesting use case that I haven't thought much about. How much does something like a stable coin and related to that, does that open up an avenue for you guys and companies like yourselves to compete a lot more with traditional banks when it comes to things like deposits as a result of that, right? So, for instance, I think lots of people probably, unless you're very much at the kind of forefront of tech and technology and you're an early adopter, I think most people presumably will have their money, their cash that they keep separate versus their account, right? Does it now, because you have this ability to take in, say, a stable coin asset, allow you to offer interest on those deposits, those cash-like deposits, and make you more competitive relative to something like a traditional bank? We know outside of the last couple of years, the interest on at those banks has been, historically pretty low, pretty poor returns. Does that offer you a new kind of competitive wedge?
Yeah, I'd argue potentially, right? Because in most cases, like if you own USDC right now and you will still have to essentially convert that into some sort of fiat to then put into something for you to get a yield on. And so, yes, there might be something of spinning up your own stable coin that you then offer a yield on, where you essentially share the yield with your customers, and then you can convert your USDC into the other stable coin and things like that. Like those opportunities exist for sure. And hey, we might get into that at some point. We're not there yet. Yeah. I would still argue it's a comparably speaking more niche audience that, will really heavy care about that.
Yeah, I mean, I just bought a little bit of Circle stock just to see what it's gonna do, but I haven't ever bought a stable coin, so I definitely am in the not niche audience. I guess when it comes to, as you're looking at your business and how folks are interacting and just yourself too, how much do you think DeFi and all of the kind of asset classes that are emerging out of that world are impacting the way in which people think about building portfolios today? Does that become how much of an influence is that playing from what you're seeing?
A big one. We see, especially also after the ETFs came around, that the behavior in crypto has moved much more from a trading behavior into a buy and hold behavior.
Mhm.
And especially in the ETFs, like we see, like there's days where we're seeing 10 times the flows into ETFs than into crypto, but it's not that the ETFs stole a lot of volume from the actual coins. Is actually more additional flows.
Mhm.
So the market there essentially, at least from the numbers that we're seeing, essentially has grown from that. And with that, and again, also just a sense that the people, certain people feel more secure and just a little better by putting it into an ETF because of the wrapper and stuff and the regulatory kind of safeguards that come with it. It lent itself to way higher deposits. And so I think that's kind of where it generally starts. And then I think what's happening now with step by step more regulatory clarity in the US around crypto, that is like another thing I think that makes people feel a little more secure around the asset class, which then again leads to higher deposits, more of a buying hold behavior, and so on. So I would argue that like the people going into crypto as an asset are more mature investors now than they maybe used to be. And that is because the asset class itself has matured.
Interesting, and you touched on it, I guess, a little bit to what I was going to ask you, but I'm going to ask you anyway because how much of this is there any kind of generational behaviors you see that are that tell you in terms of interest? So is it, do you find the younger folks
Mhm.
are the ones that are driving a lot of this adoption on your platform, or is it distributed across the kind of like cohort of age groups? Is there any kind of behavioral points that you can notice, especially given you have traditional and digital assets on your platform?
The average age keeps going up, which essentially shows that older people are starting to more and more go into the asset class. Very heavy Bitcoin, of course, just because that's the one that people heard about it, someone that was put into an ETF wrapper first, etc. But I think that is something we're clearly seeing. And I think the other thing is that so crypto was the first asset class that was born fractional, and it was the first asset class that was born retail. The first people that got rich of crypto were regular Joes. It was not the big hedgy.
Mhm.
And that created also just this retail culture around it, because you had people that tell the stories, people that have been in there early, et cetera, et cetera. And so the vibes, so to say, around crypto are a little bit there's like, hey, it's us against a big man here. And it's like, we got here first and so on. And obviously, because it started so heavily also just in tech nerds, just by the sake of it in the early days being harder to get access to it and to understand it and to have, fascination of the technology and things like that, it likely obviously lended itself obviously to a younger audience at the beginning. And so, the more this asset class grows up, the kind of moves its way up more on the age spectrum.
Yeah, I mean, I think, and I think it's so interesting that I haven't heard it put in that way, but I think that's a fascinating point you make around crypto being like the first fractional asset class. And I do remember being at Money 2020 Europe just gone now, and there was a really fascinating conversation on stable coins. And Goldie from Fireblocks made the point that even stable coins, right, they kind of their product market fit was not beat payments, but it was actually in that crypto world, the need to off ramp from all of these kind of exotic cryptos into something trustworthy. So I wonder if there is that also tells us maybe a little bit about the way in which some of these future asset classes might start to perform, right? To the point we touched on earlier on, we mentioned Circle. I think I haven't seen the market today, but it was up something like 500% since IPO, which is very interesting compared to a Chime. Both of them went public, a couple of weeks in advance within each other. Chime is up maybe 20%. And I think a big part of that is, to your point, around like that kind of retail community that was built around this asset class before versus a lot of the fintech space.
Yeah. And I think I always talk about this notion of what drives multiple expansion in a stock. And what drives multiple expansion as a stock in a stock is the story and the belief in the future. Because the higher of a valuation you give a stock, the more you have to look into the future in order to essentially create a well enough argument of why you're willing to pay that much for it. And that's why if a Tesla, for example, trades at a really high, at the time it does, like at a very high multiple, you're not going to talk about electric cars, you're going to talk about flying robots or something. And so you have to look, like, in order to, in a sane way, make an argument for the multiple expansion, aka the higher valuation of that stock, the more you have to look into the future and underwrite the future of that company in order to for you make insane argument of why you're willing to pay that much. Now, when you make the Chime Circle comparison, then it's a sense of like it is a difference of story in a way, right? And how many people can you find that have the guts to underwrite a future story and therefore drive that multiple expansion for that stock? And I think in Circle, you have a lot of people who will, who have a certain point of view on the future and how stablecoins and that kind of and blockchain infrastructure and so on plays a role in the future. And so therefore, the story of what the future looks like drives the multiple expansion of the stock. And the more people you have who can believe and tell that story to themselves, even the more you will find people who are willing to pay that high valuation, and the more it drives the multiple expansion, right? And so, and then you have a company like Chime, which is maybe just has less of that future story, and therefore it's harder to make that argument of that multiple expansion, and you find less people who are willing to pay that multiple because it's harder for them to wrap their head around that future story. And so the more you have futuristic topics and a lot of people around it that believe in that future, the easier it is for the market to decide to pay a higher multiple and therefore drive the valuation up. And so, yeah, story stocks will always do better. It might also be more volatile, of course. Yeah. The valuation is less done on fundamentals and more on future vision and story. And that is often also obviously heavily driven by retail. They just often have more of the guts of doing that because they don't have some LP to report back to next quarter of why they did that investment other than themselves. And so that is obviously what drives it. And so to your point, there's a lot of people who believe in that future, a lot of people who believe in the blockchain infrastructure and stable coins using it. And that drives multiple expansion because you have a lot of people who can tell that future story and believe in it themselves and put the money behind it.
Yeah. I mean, I think that, when you're talking about the multiple valuations and the multiple expansion, I'm here thinking about my mum, buying me trousers for secondary school and being like, oh no, get a size bigger because you're going to grow into it. But it's like you have to make the judgment of how much you're going to grow into that. And it always is like that. And I think that the circle story is particularly fascinating because in the lead up to it, there was, is it going to be acquired privately? Is it going to be acquired in because it was supposedly trying to get itself sold to. Clearly, the team there have made the right decision in terms of capturing the momentum. For your platform, this year, one of the things that's been very interesting for financial services broadly, but especially in the crypto and digital asset classes, just the change of guard in the administration, right? I think, and in the crypto space and DeFi space is particularly interesting for that because previous administration with the SEC in particular had a very different approach, and now there has been a lot more of a positive uptake of that. How much is that affecting the activity you're seeing amongst your users? Is that having a big role in how people are thinking about these asset classes?
Yes. Since the election, crypto volumes have grown. Like maybe in Q4, you saw like the biggest jump, Q4, beginning Q1, like the biggest jump. But generally speaking, still the average volumes in crypto are way higher now than they've been before the election. And that's just because there had from the old SEC, there was a lot of work that was done to kind of squeeze crypto out of the system a little bit. And you even saw like a bunch of our competitors dropped crypto because they kind of had to from regulatory pressure, and now a few people are going back into it. Like SoFi is going back into crypto now after they dropped it in the past. And there's a lot of stuff like that has happened. And so like if you were on one of those platforms and you got liquidated into cash suddenly, because they were like, we're going to be shutting down the crypto offering and stuff like that, that didn't necessarily give a lot of people a lot of confidence into it, right? And I think that was wrong by the SEC. That in that, because at the end of the day, their role is to protect retail investors, and I would argue that a lot of retail investors actually got hurt by that financially because it creates so much compression on the crypto markets in general, and created moments like forced liquidations for customers with a bunch of platforms. I think a lot of people actually lost a bunch of money there, and this kind of like ruling with force, I think, was quite harmful, not just for the space, but just purely like for the end customers who had money in crypto and who then lost money because of all those reasons I mentioned. And so any bit of positive future movement of clarity on regulation in whatever way that goes, but just having clarity, I think is very positive and only helps retail investors who are invested in crypto because it is easier for people to see what the future looks like and what to expect. And then they can make decisions on if they want to take that risk and owning those assets or not. But they're not being forced to make those decisions, which happened a little bit throughout the last few years in the old administration.
Yeah, I think that certainly it looks like, from the outside, it seems like there's been a huge positive, broadly positive response to the new approach, and it kind of maybe suggests that the old one was a bit too aggressive. So we've been talking for about 25, 30 minutes, and I'm going to make a claim. This is probably the longest conversation where the word rapper has been used without talking about AI in a very long time, I would say. We've talked about rappers quite a bit, and yet we have not even talked about AI. So great achievement there. But now, I have to ask you,
Look at us.
I have to ask you a little bit about the AI because that's, I guess, the last couple of years, or even just the last year, there's been probably two major kind of tailwinds, right, in the industry. Stable coins and the transformation and uptake we're seeing in DeFi has been a big one, but arguably, obviously, in recent years, the biggest kind of thing has been AI. How is AI playing a role in what you guys are doing, and how much are you seeing it affect your end users positively or negatively? How are you seeing that trend play out?
AI had an amazing impact on Public as a company, as well as just like yeah, like the product quality and everything. Us, two sides, right? Internally as a company, like I had an engineer literally tell me last week that he thinks he's 40-50% more productive using AI now, which is just like incredible, like to hear that, directly out of the horse's mouth, so to say, right? So things like that, like every single department in public is using AI for some sort of way. Like we've created entire TV spots using AI. Like it's been phenomenal. Now, on the customer side, we've launched kind of like a research assistant called Alpha 2 years ago, a little over 2 years ago now. That really started out as pull down on a stock, ask any question about the stock. And that was a model that was fed basically with actual real-time markets data, with company financials, with analyst reports, all that kind of stuff to really kind of, make bite-sized research really accessible. That has become more proactive over time. And so now if there's, for example, an earnings call, you get a little recap of that earnings call in your inbox in the app, like a few minutes after they hang up the call, things like that. And that has been just really powerful from the perspective of like adding context around the markets. We used to have some social features in the app. Like, for example, like a social feed where people would do exactly that kind of stuff. They would like do an earnings call recap, or they would do like, some news came out and they would do a recap of the news and create some commentary around that and things like that. And AI has completely cannibalized those use cases. And so we actually shut down all the social features recently because AI is doing these things much better now than these social features used to. And so that's another thing where you kind of see the kind of crazy impact AI. Now, the next step we're seeing for AI for us is where AI plays an active role in your portfolio construction. We just launched something called Generated Assets. If you go to generatedAssets.com, it's essentially one where you can turn any idea into an investable index. And so you can say, we're on a podcast right now, CEOs who run podcasts. You type that in, it will check which companies have CEOs who run podcasts. It will create an index of, I don't know, the podcasting CEOs, will come up with a name, comes up with a logo, comes up with a description of it. It will add companies to it. It will tell you why it added the company. It will weight the index based on, how close the reasoning is to your prompt, believes how close it is to your prompt, and therefore weights the companies in a different way. And then you can change all that, et cetera, but you basically can create any type of index. But what that basically means also is that in the past, you needed ETFs in order to do that. And over the years, what we've done is we've essentially created infrastructure where every single asset class is fractionalized. That's like the technology layer underneath. And then on top of that, now AI makes it possible to essentially create any type of index with a single prompt to then create these new financial products on the tech layer versus in some legal contract as a true exchange traded fund and whatnot, which costs you a few $100,000 a year to even run, etc. And so in a way, that type of technology is kind of disrupting ETFs now as like the next step, because you can have fully personalized products, kind of funds, to invest into, and you're not just forced to buy the S&P 500 exactly how they are. You can buy the S&P 500 minus attribute X, Y, and Z because you don't want to have, I don't know, retail stores in your portfolio or whatever it might be. And so that next layer of AI helping you to truly personalize your portfolio, to then manage them from there, do things like tax loss harvesting, et cetera, is, I think, super powerful. And that is the next step that is going. So like right now, you can create any index on generatedAssets.com. Soon you can do that within the public product as well. And then, within weeks, let's call it, you are able to then also invest into those on public itself as well.
That's fascinating. It's like, and I love the piece that you said, right? It's basically, obviously, I'm sure it's more complicated than this, but it's like a UI layer basically that you don't have to kind of, in theory, the mechanics of it are just going to be buying the exact same kind of product, but on the layer above, basically allows me to see this as one product, right? So it's got 10% in, AI stocks, 10% in cars, and 5% in sugar or whatever. But like it makes it easy for me to see it, but you don't, but then you're saving on the kind of legal structure of it and all of that stuff.
Exactly. And like you
That's
can think of it as
fascinating.
like in your portfolio, a generated asset will sit the exact same way like an ETF would. Right. So you can have your own, you can have your single stocks, you will have your SPY ETF or whatever it might be, you know, and then you have your personalized generated asset that sits as one asset. And you can have 10 of those. You can have one of them. You have one of them and call it your entire portfolio. Like it's, you know, by that, and you can spin up anything. And what's interesting is like it becomes a little bit of like a different way on how to search for stocks,
Mm.
because you search for attributes around companies that are not necessarily just their financials and so on, right? But other things that you might believe, you know, drive outcome in companies. That you can have founder-led companies, for example. You know, there's a lot of theories on the internet around how founder-led companies outperform non-founder-led companies for, you know, various reasons. You can turn that into an index that you can invest into because you believe that might be a bigger indicator of success than a PE ratio might be or something, you know? And so you have all these other, you know, attributes that you can suddenly play with in your portfolio construction, which is, I think, fascinating.
It's you know, for I think for a really long time too, right? We've talked about this kind of changing of the guard where there is more and more younger people who are obviously making more money as they get into the world of work and start saving and so forth. And then more and more of these people are value-based investors, right? They want to invest in companies that reflect their worldviews. Maybe, you know, you're climate conscious or you're this or that. And of course, this gives you the power to do that precisely as how you see fit, right? Like you don't want to just use, you know, ESG metric, for instance. Maybe you might want to use a very specific type of metric that you kind of create, and then you allow this to create that index for you. Fascinating, and that sounds like a very kind of really unique use case for actually acquiring a lot of younger people too, right? Like giving a lot more power to the algorithm generation as we increasingly are becoming.
Yeah, and I would also argue that, especially in retail, we just talked about story stocks earlier, right? And how, you know, because retail investors invest their own money for themselves, they also have a little bit the luxury of being able to think very long term, which maybe some fund managers don't, because they might have to optimize for Q4 because bonus time is coming and they're thinking about what the annual returns look like once they generate that spreadsheet for the next fundraise and stuff like that, you know? And so, you know, retail investors kind of have like a unique advantage there to some extent. And that gives them the ability to think very long term, which gives them the ability to, in their underwriting of their investments, think a little bit more long term, go a little bit deeper into how they believe the future looks like, how that company is going to look like in the future, and underwrite that story a little more than just purely the current today fundamentals. And that leads to also a way where their methodologies and the way they look for stocks are just a little different, because they're not just based off last quarter's results. And that type of searching through prompting, like generated assets enables people to do, is exactly like, it kind of fits exactly into that behavior where where we're trying to underwrite a thesis you have of the future, not just the financials you have of the company from last quarters.
And I'm guessing, you know, 5 years from now or 10 years from now, whenever, I mean, it's probably going to be by next year, given the speed at which you guys are moving, but it does kind of also democratize so much of the TradFi world. And so far as if I am able to create these indexes that then start outperforming the markets and do so in a continuous way, probably then there's going to be a use case where other people start copying my index. Perhaps I get some type of compensation for allowing that to happen. And now it creates maybe. I see you smiling. So
100%.
I see.
That is, and that is the plan.
Love
More to
that.
come on that, but yes, that is the plan. And I think there is, you know, in like our like Series A pitch deck or something, you know, we had this little thing around what we called new age analysts, and it was essentially like all these guys on Twitter and whatnot that, you know, start to develop a following where, you know, they cover certain companies, you know, but they cover it in a little bit different way than, you know, your typical banking analyst does. But they're kind of, in a way, they're a little bit like stock analysts, you know. And so we had this little slide of like, you know, a few examples of people, and we're like, oh, the new age analysts, and like, you know, how that's going to be in the future, and blah 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 blah. You could argue that those are also the people who become the new Cathy Woods.
Mhm.
The new personalities that have ideas of the future and have theses on on a certain investment strategy and so on, that they don't just talk about, but they also put their money behind, and where you can put your money behind as well. And
Yeah.
that, I think, is going to become super, super interesting.
Yeah, and especially because, right, like the biggest thing in investing, I think, is skin in the game. You kind of everyone can be like right once or twice, but being consistently right is tough. And having it on a platform where actually you don't need to trust me, you don't need to enjoy my tweets. You actually can just look at my portfolio and on an ongoing basis creates this kind of level of trust. Life, it's been great chatting to you, and I know we're running out of time, so I do want to have one more question before we wrap up, and that is really around, how you see the world looking in 5 years. We're seeing TradFi and DeFi are increasingly integrated. What do you think this is going to look like if we do this conversation in 2030?
I think AI will have a massive impact, and I think products are going to look entirely different because of AI. You know, we launched Alpha as like our first thing into AI that became more proactive, then generated assets now comes, and so on. And we're now in this point where it's like we're likely going to kill the name Alpha soon, because it's not like this thing anymore. It's just the product has all these things. When I think about AI, I always think about that most of the value of AI is going to be the sum of a lot of small things. It's not going to be this one magical thing that, like, but it's going to be just integrated on a lot of small things. And the sum of all of that is going to be what creates the most value. And I think that's what we're seeing within the public product, for example, happening right now. And so I think you're going to see how, the best products are going to be entirely AI powered. They're just going to have it built into everything to some regard. But it's not going to be that one magical feature. It's going to be 100 small features that just create the magic in the end. And I think that's a lot we're going to see. And in crypto, I think what is happening right now, and I think is more that we're still in a world where the old world is being rebuilt on new rails. And as much as that might benefit the certain companies for certain things, we'll see if, because it's built on these new rails, how much benefits those are going to unlock for the end user. I don't want to say I'm skeptical, but I do think we're still, it's still to be seen, of if it will really unlock a lot of value, or if we're just going to end up building the same thing in a different color.
I think that's a great place to end it. And as they say, time will tell. But thank you so much, Life, for joining us. I myself have enjoyed myself a lot, and I've learned so much. So thank you so much. And to our listeners, thank you for joining us today. We'll be continuing this conversation in Las Vegas, so make sure you join us. And then in the meantime, make sure you check out
Generatedassets.com.
generatedassets.com and have a try of making your own index.
Awesome. Thanks, Mickey.
Awesome. Thank you so much.